So you want to buy a house and you don't know where to start? Hi friends, welcome back. If we have not met yet, my name is Mary Howard and I'm a realtor here in the Queen City, Charlotte, North Carolina region. I hear it all the time, buyers want to buy a house and they do not know where to start. So to help answer that question, we have broken the whole home buying process down into 9 steps. This is a series of videos, how to buy a home step by step. This is step number 4, and what we're talking about today are the different types of loans explained, getting pre-approved for your mortgage, and shopping for mortgage lenders. If somehow you found this video without watching the rest of them, please click this link right here and then catch back up with us. I have to put out this little disclaimer. I am not a lender, a licensed loan officer, or a CPA. This is all information from my experience. There are about 8 different types of mortgage loans, but for the sake of your time, I'm only going to be talking about 3 of these. And if you want more information, shoot me a text message and let me know, and I can put you in touch with a trusted lender that can walk you through the deeper details. All right, so explaining these loan types. The first one that I'm going to explain is called the conventional loan. Conventional loans are often the best options for borrowers with strong credit and those who can contribute at least 3%, possibly more, to a down payment. These loans are not guaranteed by the federal government and they typically have really low minimal down payments, but they do have stricter qualifications, which means for you to qualify for this loan, your credit is probably going to be up around 740 or higher. Conventional loans are really cool because as a buyer, this is probably the loan that you're going to use if you are wanting to buy a second home, a vacation home, or an investment property. Something else that's really cool about these loans is that the appraisals usually come back without any conditions, which is nice. The next loan that I'm going to be talking about is the VA loan. VA loans are for current and veteran service members and their eligible spouses. There are a few others, but typically this is an exclusive loan for this particular clientele. These mortgages have very competitive interest rates and usually requires no money down for the borrower. It is a government-backed loan, and unfortunately these loans have gotten a stigma because it is government-backed, but honestly these are my favorite type of loans to work with because of who's using it. Thank you for your service. The next loan that I'm going to be talking about is the FHA mortgage, and this one is backed by the Federal Housing Administration, which is another government-backed loan. FHA loans are usually easier to get approved for, but they also have stricter requirements for mortgage insurance, or what's called PMI. So if you have a lower-ish credit score and you have the minimal down payment of a 3.5%, FHA loan could be an option for you. The cool thing about FHA loans are that they allow for the lower credit score, lower mortgage insurance payments, and the rules about gifts as down payments are easier to navigate through. The downside is if you are using an FHA loan, there will be additional fees attached. So again, these are the top 3 loan products that are used, and this is a very general outline to give you a little bit of context for the next portion, which is speaking and shopping for a mortgage lender. And when you're interviewing mortgage lender, the top 3 questions that you need to be asking are: 1, how are their rates in compared with today's mortgage rates? 2, find out what your closing costs could be. And 3, compare mortgage origination fees between all of the lenders you're interviewing. Once you have chosen the lender that you want to work with, and after verifying the rates and what it is going to cost you to work with them, the next step will be getting pre-approved for your mortgage. By doing this, you're going to get the real numbers, the amount of money that you will be able to borrow to purchase a home. Now, the downside is that that is a hard credit check and it will show up on your credit report. But the good news is, if you are shopping around at this time, it's only going to count 1 time as a credit hit within a certain time frame, and I think that's 30 days. I do recommend you shopping around, but once you start this process, you've got to know that you are on the clock. I have put a list together of the information that they're going to need from you in order to get you pre-approved, so check down in the description below for your copy of that. And I have created a video explaining the difference between pre-qualification and pre-approval, and you can watch that right here. If you found this video helpful, could you hit that thumbs up button? If you have any questions or comments, feel free to leave those in the comment section below, or call, text, email me, however it works for you. Keep your eye out for the next video, step 5 in our series, choosing your realtor. If it is already published, it'll be popping up on your screen right here. Thank you for watching. My name is Mary Howard, and this is There Is No Place Like Home NC. Take care.